9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man.
And I'm April Hong in Singapore. We're counting down to the open of markets in the Greater China region. Our top stories. Asian stocks and the dollar under pressure as President Trump extends a ceasefire with Iran while maintaining a blockade of the Strait of Hormuz. Plans for a fresh round of truce talks falling apart. Trump's Fed chair pick, Kevin Warsh, pledges to act independently, rejecting concerns that he would be the president's sock puppet. Also ahead, Taiwan abruptly cancels President Lai Ching-te's first overseas trip in more than a year, blaming interference from Beijing. And CATL in focus as it unveils new fast-charging battery technology to stay ahead of competitors.
Yeah, just like that CATL battery, right? Full charge in 6 minutes. I think that's really kind of, in some ways, reflects what we're seeing in terms of sentiment across risk assets here today. When we talk about how, yes, we've erased losses since this war began on EM equities, but today we're starting things off on this Wednesday morning a little bit on the cautious side of things. Perhaps there's still a lot of lingering questions about where Iran talks stand after they did falter. J.D. Vance putting his trip to Islamabad on hold. And yes, now the ceasefire extended indefinitely.
Yeah, and then you also have some of these headlines coming through from Kevin Warsh's testimony in which he pledged to act independently if confirmed, though we didn't get very much details on the trajectory or near-term interest rates. What was also interesting was how he highlighted, unlike some of his colleagues, past and present, he doesn't quite believe in forward guidance. I wonder what that is going to do for bond markets in terms of stability. Let's take a look at market action because we are, of course, seeing investors reacting to these headlines from the US president, from extension of the ceasefire, although no timeline attached to it. So it looks like something that's indefinite and more volatility. We are seeing Brent pulling back a bit from the 99 handle. In terms of treasuries, we did get them pulling away from session highs following on from Trump's announcement of the extension of the ceasefire. Bloomberg dollar index also a reversal from yesterday's surge. Take a look at how we are faring in Asia stocks. Yes, a bit of caution, but don't forget that we did reach record highs on the Kospi and the TAIEX just a day ago. You're also seeing S&P 500 futures pointing to quite a solid start to the US session. In terms of Chinese assets, as we know, it's been well supported amid the war. Take a look at how the yuan is reversing from yesterday's slide, which was a bit of a breather following on from the surge in the dollar. We are also seeing the further climb in the Chinese bonds, especially on the long end, I think, amid ample liquidity. In terms of stocks, pointing to some downside today, we'll of course be watching out for stocks of CATL as well in the session, Yvonne.
Yeah, that battery might be lifting the rest of the battery sector here when we talk about a charge from 10% to 98% in just 6 minutes, right? Basically the same amount of time it takes to fuel a car with jet fuel, right? So that's certainly one thing to watch. Gas, I should say. But take a look when it comes to the top story here today, right? There's still some green when it comes to the macro side of things when it comes to China. You talk about what CGBs are doing. The renminbi is at a 3-year high. But then again, there's this. President Trump says he's extending a ceasefire with Iran a day before it was set to expire. But he's maintained the U.S. blockade at the Strait of Hormuz as plans for a fresh round of talks with Tehran fall apart. For more on this, let's bring in our team. Jill Deeses is a managing editor for our news desk, and from Singapore, Mark Cranfield, our MLive strategist. Jill, I'll start with you. Where are we now?
I mean, Yvonne, it's so difficult to really get a steer on where exactly these talks are going to, go from here, right? I think that the really notable thing about how things really fell apart over the last 24 hours is also just a lot of the rhetoric that's coming out of Donald Trump himself. I mean, no surprises here, but, it can often feel like you're being pushed and pulled in a bunch of different directions, very erratic. I mean, this is a man that told us by telephone just, a day or so ago, that essentially, he wasn't expecting to extend a ceasefire necessarily. He said on CNBC yesterday, just several hours before the ceasefire deadline, deadline was extended, that he expected to be bombing. I mean, you've got that level of rhetoric coming out of him. But then obviously, you know, as the day went on, J.D. Vance never made his way to Air Force Two, never made his way to Islamabad. You saw those talks sort of fall apart when Tehran, wasn't, really planning to participate in those talks. It seems like these sides are really, really far apart from each other. There's a lot of really critical details here that don't really seem sort of like manageable or achievable. I mean, particularly, a lot of the U.S.'s demands over the nuclear program in Iran, right? That's like such a huge part of this. And if, from here, maybe they're able to sort of reassemble, have talks. We've certainly heard from, the leader of Pakistan that that's something that he would like to see, but we're just not really sure where this ultimately goes right now.
So what are the factors that we need to see in order for talks to resume? What do we know about that so far?
So I think at this point, again, it's sort of this idea of, we don't really know, honestly. I mean, you've got, this extension of the ceasefire that's kind of indefinite. You do have, again, these threats from Donald Trump to maintain that blockade. So at least in his mind, that's that idea of maintaining pressure on Iran to ultimately come to the negotiating table. Maybe that's something that ultimately works. I mean, remember, it was just about 24 hours ago that it did actually seem quite likely that there was going to be some sort of a resumption of talks in Islamabad. So that was something that did seem like it was maybe on the table at some point. I think the question, though, is ultimately whether you can convince these two sides to come to the table. But, I don't think that, anyone's necessarily interested in this kind of, continuously prolonged conflict. But again, it really does come down to whether or not there's any sorts of points of negotiation they can find here. And I think when, you look at Tehran, there's some of these issues demands that the U.S. is bringing that they consider just non-negotiable.
Jill, thank you so much. Jill Deasis for us there. Mark, let's bring you in here. I mean, when we look at how markets, they seem to be able to look past all this. And the ceasefire volatility sounds a lot like the tariff news volatility we've been dealing with in the past year as well.
It's a question for traders of being able to put a more consistent pricing on things. So one of the reassuring, in a way, aspects for traders over the past couple of weeks is that oil prices have settled into a bit of a range here. So particularly for equity traders. So when you are trying to decide on your portfolio how to position it as an equity investor, there are several inputs. Bond yields and oil energy prices in general are two of the most important things that go into your decision making. If you can be reasonably confident that bond yields are going to be fairly stable and the energy prices, whether they're high or low, as long as you can predict the path for them, they're going to stay $90 plus or minus $10. That's a predictable range for an equity trader. If he can put that aside and say, okay, I don't see bond yields and energy prices being too much of a volatile problem for me, I can go back and focus on what really matters in the equity space. And for example, we've got plenty of good narratives, whether it's AI, whether it's chips, whether it's the memory sector. All of those are coming back into focus, and equity traders can focus on that and project that forward earnings are going to be good enough to cover whatever disruptions there may be on the other side of the equation.
Yeah, Mark, there's a lot of talk about whether EM is in this super cycle right now, given the AI trade, right? You take a look at the valuations of some of these, Korean chip makers, for example, the Hynexes, the Samsungs. They're still quite a fraction of what you're seeing when it comes to the NVIDIAs of the world as well. Do you think that valuation is warranted and can it actually catch up?
As an old trader, the minute you hear the word super cycle, sell. That's it. That's it. By the time people realize you're in a super cycle, it's way too late. This one may go on for a little bit longer, but certainly if generally people are starting to believe there's such a thing as that, we've, over the past 30, 40 years, so many times when people actually say we're about to enter a super cycle or we're in a super cycle, by then, from a trader's point of view, it's too late. It's coming towards the end of the story. So, yes, there may still be a little bit more to go, but it essentially is telling you there's a lot priced into the market already. Certainly, we've got an earnings season going on in the United States. There'll be another one in Asia coming up pretty soon. We'll get through that probably okay. But we've heard there's been other chatter in the market over the past few days suggesting that some of the valuations are getting a bit ridiculous, even in the Asian space as well. So we're probably nearer to the end of the cycle than the beginning. So don't believe too much about a super cycle.
We're also watching valuations of SpaceX, right? That upcoming IPO, we're seeing some of these leaks on its financials. How much of a catalyst is that going to be for tech stocks?
It is to an extent, but this is a very specific story, really. This is an IPO race. So basically, SpaceX is in a race with Anthropic and OpenAI. Whoever gets there first gets the $1 trillion valuation. That is, of course, what Elon Musk is going after. He wants SpaceX to be the first $1 trillion company from an IPO point of view in the United States, and he wants to secure the ground there. Because if he can get the funding for that, it won't go to Anthropic and it won't go to OpenAI. It's a battle between the three of them. First come is the winner. And he clearly has the user advantage at the moment, and he's trying to seal that. There's a lot of numbers being floated around, as there typically is. When a new company comes to market, you get a lot of unsubstantiated numbers which float out there, and they look very impressive. Whether they're really there or not remains to be seen. But it's for Musk to consolidate his position. Traders can see that. The trouble with such a massive IPO as that, it sucks a lot of money out of the market. It won't go so in a way, for the overall market, it's a slight negative. It looks great that valuations are up in the sky, $1 trillion might be coming. But once you take that money out of the market, it can't go somewhere else. So somebody will lose on the flip side of that. So for the tech sector overall, it might not be a great thing. It'd be very good for SpaceX. It might not be great for the tech sector overall.
The other thing we're watching is also Warsh's testimony. What stood out to you, and what is that going to mean for bond markets in particular?
Well, apparently he doesn't believe in forward guidance. So he obviously hasn't been watching over the past 30 years, because Alan Greenspan started forward guidance because he didn't have any, and he got called in front of the Congress for raising interest rates before warning anybody, and they didn't like it very much. That's why we've had forward guidance for the past 30 years or so. Now, if Mr. Warsh wants to backtrack on that, he might find a couple of things go against him. One, it'll be a lot more bond volatility. Bond markets like to know roughly where they're going in terms of interest rate settings. That's why we've had relative stability, or mostly we get stability in the curve of the Treasury curve. Also, Scott Bessent wants yields below 4% at the long end of the curve. That's not going to happen if we don't have forward guidance. So it might not be as easy as he thinks.
Okay.
Speaking of yields, Mark, I'm taking a look at the CGB market, and we're talking about these yields are, I think 6-month lows right now. You're seeing a lot of inflows into the bond market. The renminbi is at a 3-year high right now. Seems to be a big macro story that's kind of developing in China, and this sort of safe haven status that China has achieved in some ways. What's your take on what's going on there?
Yeah, the central bank there, the PBOC, has done a very good job on stabilizing the currency. They've made the yuan very attractive during a time of turbulence as well. It performed fantastically well during March when the US dollar was very strong. Other currencies were falling apart. The yuan not only held its ground, it actually appreciated slightly against the US dollar. So it's really doing a very good job of attracting inflows. Once you attract big inflows into a currency, typically it goes to the bond market. Some goes to equities, but a lot of money is just parked in the bond market. If China has ambitions to have a reserve currency, which they appear to have, it will need fixed income investment on a big scale. So more money comes into the currency, goes particularly into the short end of the bond market. Some will move into the medium term. But that is exactly what China wants to see. They want to see a core amount of money stabilizing their bond market, attracting other central banks and reserve managers. So far, it's working pretty well.
Yeah, it certainly is. We'll see what the PBOC does here today on that fix right now. But it was strengthened the first time in 4 sessions or so on Tuesday. Mark, thank you. Our MLI strategist, Mark Cranfield, joining us out of Singapore. In just a few moments, we're going to get more on how the Iran war is changing, of course, strategies and investing and the like. We're going to take from CGS International Group CEO Carol Fong. She joins us to discuss the Middle East uncertainties and how she's advising clients, as well as their involvement in a fund seeking opportunities in China and Southeast Asia. And we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. We are seeing futures, pretty gloomy outside. Yeah, futures a little bit gloomy here this morning as well. This is the China Show. Your renminbi fix just crossing the Bloomberg terminal here this morning. It is on the weaker side of things here at 686.35. But as we've been talking about, right, we're still around that 682 level for dollar China. So still hovering around those 3-year highs and certainly still seeing some positivity around the currency of late. April.
Yeah, and the other story, of course, we've been tracking aside from the moves and how they've been supported in Chinese assets is how Kevin Warsh has given his testimony before the Senate Banking Committee.
Are you going to be the president's human sock puppet? Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve. The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
Our Fed and economy reporter Enda Karan joins us from Washington now. So, Enda, what is your read on how Kevin Warsh did in his testimony? To what extent has he managed to maintain his credibility on inflation?
Well, I guess he had to do two things. On the one hand, Averill get across the idea that he would defend the Fed's independence and steer policy based on what the economy needs. He certainly claimed he would do so. As you played there in your clips, he pushed back against the idea that President Trump asked him to move rates. He said he will do. He didn't give any near-term indication of what he would do with policy, but he made it clear that the Fed should be not afraid to make whatever decisions it wants to make itself. Now, that was the kind of the politics part of it. And then on the policy part of it, I mean, he covered a lot of ground. He kind of mapped out this idea that the technological revolution sweeping through the economy could be one way towards getting towards lower interest rates over time. He spoke about shrinking the Fed's balance sheet, but he's very careful in his language around that. He said it would have to be very careful and methodically done, lots of consultation. He spoke about closer cooperation with Treasury on some policy areas. He said the Fed's communications need to improve a lot. He said it needs to be a new framework for inflation as well, how they think about it, which data points they look at. So there was a lot of ground, a lot of micro points brought up that people hadn't heard from him in a while, or the first opportunity to hear from him on these points in some time. But ultimately stepping away from it, he didn't give any clear signals on where he would go with policy if he was confirmed in the near term. And of course, he professed that he would stand up for Fed's independence, but we all know there's significant political pressure on the central bank at the same time.
And it seems like if confirmed, he would lead a very different Fed, right? You're talking about shrinking the balance sheet. You're talking about, when it comes to, no or less forward guidance, or, how does it change overall when it comes to how bond traders should be looking at this and really the reaction function from the Fed moving forward?
Well, again, if you go face value, listening to Mr. Warsh, he sketched out he'll change several things the Fed do. Yvonne, like on the one hand, you mentioned on the big balance sheet stuff, he said they shouldn't be holding long-term Treasury securities. He wants to get that shrunk from 6.7 trillion down. That's going to be a major job in and of itself, but that's why he's been very careful in his language around that. And then he's talking about a new inflation framework. We don't quite yet know what he means by that, but he was talking about maybe trimmed means instead of core PCE, for example, when it comes to keeping an eye on what's happening with inflation. And then, as you move along his agenda down to the micro points, he spoke about communications, and he seemed to be kind of hinting at Fed officials are maybe speaking too much, and he didn't sound especially convinced that the Fed needs to give the press conferences that it gives. So clearly scope for changes there. Now, as I say, it's kind of broad brush strokes. We don't have specifics. He's, of course, not yet confirmed yet because of the whole DOJ investigation of the Fed. But again, going at face value, the Fed chair can only do so much on his own, but he clearly wants to try and make changes where he can.
Yeah, and I was just about to ask, is this all a moot point, given how it could hinge his confirmation on whether Tom Tillis gets his way amid his showdown with Trump?
Very unusual, a confirmation hearing that may not lead to a confirmation. It's odd because just before Mr. Warsh hearing kicked off, we had kind of a doubling down by President Trump that he's sticking with this investigation into the Fed, into allegations of overspend on the renovation of their headquarters here. So President Trump showing no sign of an off-ramp. Now, we know that Republican Senator Tom Tillis, he's got this key swing vote. He has promised he won't approve or that he will block any Fed nominee so long as the DOJ investigation is going on. He sees it as a political attack on the Fed. He hasn't really changed his position. There was one wrinkle today that came out of some of the conversations with the senators, Senator Scott, Senator Tillis making a nod to it as well, his remarks. The idea that maybe if the DOJ investigation was dropped and Congress picked up their own investigation into this, that could be some kind of an off-ramp for Senator Tillis. But again, that is early stages for this proposal. We don't quite yet know what guarantees or what the specifics of that idea would need to be. But clearly it would require President Trump stepping away from this DOJ investigation, and all the messages from him consistently are that he's ploughing ahead with it and that he's certainly gunning for the Fed on this particular issue.
Yeah, his future, Warsh, seems still uncertain. All right. Thanks so much for bringing that up for us, Enda Curran, our Fed Reserve and economy reporter, on this confirmation that might not be a confirmation, right? We'll see. We take a look when it comes to how the pre-market is shaping up here in Hong Kong. We are still seeing some downside, about 0.7%. Futures are now deeper in red here. So it looks like they could be joining in on this cautious day for risk assets here. You are continuing to see inflows into the bond markets, though. We're at 173 for your Chinese 10-year yield. And yeah, we're flat when it comes to the currency, 682.52. Plenty more ahead. This is Bloomberg. All right, here's your agenda for China today. Of course, we continue to see whether this HSI rally can continue. Looks like things are set to hit the pause button here today. That yuan strength also a little bit as well, but we're pretty steady on the currency around 682 levels here right now. CGBs continue to rally here today. Zijin Mining earnings. Of course, we'll see how the stock reaction is going to be. And we're watching batteries and CATL. Interestingly enough, the stock in Hong Kong is actually falling for today. Maybe a bit of profit taking just given the rise we've seen in the stock already. But this tech day did stand out, according to a lot of analysts out there, April, when it came to just what products came out here. Obviously, they talk about this battery that can recharge in 6 minutes. And that certainly is one thing that we're watching very closely as we count down to, of course, the auto show in Beijing.
Yeah. And I think what's been unveiled on the CATL front, it looks like it's outshining some of the features that BYD brought to us last month. So that's going to be interesting to watch in the EV or the EV battery space as well. Of course, that is a sector that we will be tracking as trading opens. But this is what you're seeing already in the pre-market, perhaps also part of what we're seeing broadly in the region, that bit of risk creeping in, given how the ceasefire, yes, is being extended, but still a lot of uncertainty on that front when it comes to the Iran war, Yvonne.
Yep, CATL, there you go. We're seeing it down 2% in the 8-share market here today. So, they did offer some new technology and products, but when it came to solid-state battery efforts, the likes of JP Morgan say that was a bit of a disappointment there. No update on that front. Perhaps that's why you are seeing a bit of disappointment. Also, Sinopec, they also cut a portion of their stake there after this rally in CATL. So we'll watch very closely how this all shapes up at the open coming up next. This is Bloomberg.
Welcome back. You're watching The China Show, and we're counting down to the open of markets. Of course, a couple of things we're tracking in terms of drivers here, including these geopolitical uncertainties amid the ceasefire extension as announced by the U.S. president. But the timeline is indefinite, so these uncertainties continue. But not only that, take a look as well on how these developments, tech-related, right, out of China, maybe that is also something that will figure into the equation for the session. You have the likes of CATL in the spotlight, surgical robots to some extent as well, Yvonne.
Yeah, there's a flare of tech still there, which was a big theme yesterday on the China Show. Today, I would think maybe we're being overshadowed by some of the headline risk once again when it comes to Iran, as you mentioned, Avril, here, because, we didn't expect that these talks would falter before the ceasefire expires. So the fact that they're extending it is a good thing, the ceasefire, but then indefinitely, right, as you say. And at this point, the Strait of Hormuz remains still blocked. So in that sense here, it seems like, yes, we're not seeing an escalation in military operations, but still, we're still figuring out what's next when it comes to, of course, negotiations moving forward. So in that self, you're seeing a bit of, maybe you can say, consolidation, profit taking in some of the tech plays here in the region here today. So most of North North Asia is taking a cautious step back. So is onshore markets here in China today. We're down about a third of 1% for the CSI 300. What continues to be hot is this bond market. Take a look at what comes to the long end of the yield curve in the CGB market. And we're still seeing the 10-year yield down some 2 basis points at 173. I think it was Zhongtai Securities that thinks, look, liquidity is still quite abundant here right now. We could be seeing those yields heading to a 160-something handle in the near term. So maybe those inflows could continue in the bond market in some ways. Shanghai crude is still a bit elevated given the volatility that we've been seeing when it comes to oil prices in Iran as well. And we're focusing very closely on really some of the Seven Sisters and how that's really charging this to Chinex of late. Even Shenzhen is actually falling back here today. So that's really led by the likes of Zhongzhou, Inalite, one of the Seven Sisters here as well. They just came up with some news. According to some reports from the IFR, they are looking for a dual listing, a $5 billion IPO in Hong Kong as soon as June. So we'll see if we hear more about that. When it comes to Hong Kong, this is what we're seeing here in the city today. It seems like it is tech that's dragging things lower here. So we're down about 1.7%. We've broken below that 5,000 psychological level for the HS Tech. And what's really driving that, you're seeing here is Alibaba, Baidu, both lower by about 2%. Same goes for Meituan as well. So we're coming off some of the initial highs when it comes to overall China tech here this morning. Offshore renminbi, this is interesting, right? We're pretty flat, but we're still talking about 3-year highs for the currency, for the offshore and onshore rate, hovering around that 682 level. We talk about inflows into bond markets, and really that also helps when you have a stronger currency. But this is also coming in the backdrop when you haven't seen Asia FX really rebound the same way against the EM complex, perhaps because of that energy exposure that a lot of these EM Asia FX currencies do have in Southeast Asia in particular and the like. But China stands out here still as that anchor of stability. Let's take a look when it comes to CATL, just given what we saw in Tech Day. So they announced this new battery that can charge from 10% to 98% in just 6 minutes, right? Putting it on par really to, putting gas in a car in some ways. Certainly that sounds very exciting, and it really outshines what we heard from BYD back in March. But certainly we are seeing some of these battery makers come off here, some of the highs that we have seen. CATL has had a really good run here in the last couple of days since really their earnings came out just a few weeks ago. So mostly lower across some of the battery makers here today. And we're focusing, of course, some earnings. Zijing Mining, there was a pretty big beat when it came to its earnings coming through here. We are seeing some gains for Zijing Mining. ASMPT, there you go. The chip maker up some 5% on their results as well, Avril.
Yeah, Yvonne, you just highlighted as well some of these companies, perhaps their exposure to Southeast Asia or the linkages there. Let's get more on how the conflict in the Middle East is impacting investment strategies. Our next guest heads CGS International, the overseas arm of China Galaxy Securities. Its group CEO, Carol Fong, joins us now here in Singapore. Carol, great to have you in the studio. We are talking at a time of a lot of uncertainties. I just wonder, the Middle East conflict, how has that perhaps shaped the way in which you're advising your clients?
Well, thank you very much for inviting me again on Bloomberg, the China show. I think that if you look at what's happening in the market, it's a double shock we're experiencing, right? I mean, early on we had the tariff situation, but that did not actually kill the risk appetite. It just bifurcated it. And right now, with the situation happening in the Middle East, that's obviously creating a lot more angst in the capital markets. You've seen a lot of gyrations in the capital markets up and down based on what the US says and what happens in the Middle East and so on. So I think for us, what we've seen and what we're advising our client is that, we've seen a pause in terms of how investors are looking at taking on risk, not because there's lack of capital or lack of interest, but more because of the fact that they cut price risk credibly. The other thing that we're also seeing and we're advising clients is that they're more discerning. I mean, you have to be careful about what you invest in, right? So you stay invested. You may want to top slice off some of the high performing stocks, but you stay invested, right? And I think that the other thing that we're also looking at, from CGS International angle, is the fact that we're also seeing that in spite of what's happening in terms of the global economic situation and the tensions and so on, it's the fact that we are seeing now more China-ASEAN cooperation. That has actually been enhanced over the last couple of months. I think case in point really is the fact we just launched our Galaxy-oriented China-ASEAN investment program, a sovereign-led fund. It is led by CIC, INA, and the Sovereign Fund of Central Azerbaijan. We closed it at 520 million US, and this is actually focusing on the China-ASEAN corridor. Okay, and the China-ASEAN corridor why it's interesting is because it's bi-directional. Most private equity funds, when they launch it, is one directional. So Chinese companies going into Chinese companies going to Southeast Asia, Southeast Asia's company want to connect into China. Right. That's what the fund is about. So these are things that we are doing, and we are advising clients that that you may want to kind of look broader than just pure public markets. Look at what basically is happening in China, ASEAN.
Right, those flows in both directions. 520 million first close, you say? What's the target?
The target is 1 billion. It was just actually, I was just in Beijing last week. It was just launched last week, so it's quite fresh news, so to speak. Yeah.
So what are you guys doing to get to that 1 billion?
So the second, we just launched the first phase. We closed the first fund last week. So now we're working on the second phase, and we do hope to bring in more sovereign funds into the program. Because right now we have one from Southeast Asia, one from China, and one from Central Asia. Yeah.
And how strong are you seeing the IPO pipeline? You're saying things are on pause as far as risk is concerned.
Yes.
What is that going to look like, say, in the second half of the year? Perhaps, the optimism that things are more stable at that point.
Yeah, I think that the pipeline is quite strong. I mean, a case in point, last year CGS International ended the year with 60 deals in the pipeline. And first quarter of this year, I think we've done pretty well. Interestingly enough, Bloomberg actually, we just saw the league table from Bloomberg, and CGS International, I think we were top 5 in the league table for MIST. And so the first quarter of this year has been quite strong in terms of mandates that we've received in Southeast Asia. And I think that the mandates that we're looking for the rest of the year also looks pretty strong. Just to add, there's a lot of hype about the A share listing to H share listing, but I think what is really flying under the radar is really the potential for A to S listing. Sometime in the late last year, the Chinese government and the Singapore government signed the JCBC. They signed an agreement to promote dual listings of A to S. So it's never happened before. So we're working on a couple of mandates to bring the hype from A to H to A to S. So that's good. That's going to be an interesting thing to watch out for.
Yeah, given maybe you could take some of the competition from Hong Kong in some ways, Carol. It's interesting too. You talked about sentiment a little bit, but from this Middle East war, what we have learned, it seems like Southeast Asia is in some ways very much exposed to the energy dependency of the Middle East and the like, and that Southeast Asia in some ways is more vulnerable than most parts of the region. Has that changed at all how your clients are looking at Southeast Asia now? Has it dented risk appetite in what way, you think?
In fact, I would think it's slightly the reverse, if I may say. I'd just like to bring back some history in this. There were 2 oil shocks that happened, 1973, 1974, and basically 1979 to 1980. In the 73-74, actually, oil prices actually quadrupled by 4 times, from $4 to $12. Right now, oil prices have gone up, but it's not gone up to the extent that it did actually in the 1970s and 1980s. So, and what we've also seen is that the Southeast Asian currencies have generally strengthened, except for Philippines as well as Indonesia, which came down. So we've seen actually more inflows coming into capital markets in Malaysia, Singapore, of course, because of the safe haven status, and even in Thailand, you also seen the Thai baht strengthen and money come into the capital markets. Yeah.
And so, what markets are you seeing the most inflows right now in Southeast Asia?
Actually, Singapore. I mean, both on the public side as well as on the private wealth management side, we've seen quite a bit of inflows coming in. And that's the reason why the Sing dollar has been quite strong. And secondly, if you look at the markets, it has actually been very steady. And overall, I think that it has done, I would say, one of the best performing markets in Southeast Asia.
And this is coming at a time where Singapore is trying to reinvigorate its stock markets, and it's done so with these tranches of support from the government as well.
Yes, correct.
What do you think it's going to take for all this to become more organic, though?
Sure. I think the EQDP program that's been promoted by the government has been very successful. I think we had the first leg up. But for it to be sustainable, I think that we have to do more. And I think what is, in my view, what is currently lacking is with the supply side. Okay, because I mean, what the government has done with EQDP is to really bring up the demand side of the equation. Fund managers giving them money, they deploy back in the market. But until we get the activity, we get in Hong Kong, for example, they get more IPOs, more placements being done, deepen the capital markets in Singapore, and then I think that you probably have a more robust ecosystem. I've always, brought up the point that I don't know. Some of you may remember when Singtel was floated, the government gave free shares to every citizen in Singapore, and that really, moved the market. So the question is, can you do a PSA, can you do a PUB, for example? And that can really, really kickstart the whole supply chain of it.
The companies that you highlight are, a bit more traditional in nature. To what extent is the lack of AI exposure for the Singapore market perhaps a weak link for us?
Yeah. Okay, when you look at AI, I mean, AI has different aspects, right? There's a software part of it and the hardware part of it. I think if you look at it, Singapore is pretty strong on advanced semiconductors, for example, which does drive some of the activities in AI. And secondly, I think in data centers, I mean, Singapore has been one of the, I think, early, I would say, proponents of setting up data centers. And of course, that's now moving to Malaysia, even to Indonesia. But I think Singapore does have its space to play, especially what we call, some of the advanced, technology and so on. Yeah.
And with cross-border, we didn't get to talk about the special economic zone, but that could be another tailwind.
Exactly right. Yeah,
Carol,
exactly.
Great to have you in the studio. Thank you so much for sharing your plans for the business with us. Carol Fong is Group CEO of CGS International. And coming up, Taiwan's president cancels his first foreign trip in over a year, blaming Beijing as several countries deny airspace access. The details next. This is Bloomberg.
Well, Taiwan has abruptly canceled President Lai Ching-te's first trip abroad in more than a year, citing pressure from Beijing. Let's bring in our China correspondent, Min Lo, on what happened. Why was his trip canceled?
Yeah, he was supposed to go to Eswatini, and that is one of the remaining 12 countries that still have diplomatic ties with Taiwan. But then at the last minute, Taiwan says that 3 countries have abruptly pulled back or revoked their approval for Taiwan to fly over their airspace. And according to Taiwan, it was under pressure from Beijing and even under economic coercion. Could be things like maybe threatening to impose sanctions on them or revoke huge substantial amounts of debt relief or halt financing, for example. None of this, though, had been confirmed by the 3 countries involved. Seychelles, for example, is saying that it didn't have any pressure from China, but it doesn't recognize Taiwan as an independent country. Madagascar also saying that, well, they have the right to refuse Taiwan from using its airspace without elaborating further. But I think what is significant this time is it sort of signals a level of boldness that we're seeing from the DPP, which is Lai Ching-te's party, right? Because remember last year when he was supposed to go to Paraguay and stop over in New York, the Trump administration had prevented him from stopping over in order not to derail talks with China. But at the time, Taiwan's response was they just acknowledged that yes, he was supposed to go, but then in the end he's going to stay home to focus on typhoon recovery and to focus on talks, tariff talks with the US. So this is sort of a very rare occasion where they directly accuse China of interfering on this front.
And Mimi, this is coming not long after the KMT leader met with the Chinese president. Where do things stand in aggregate between Beijing and Taiwan?
Yeah, I think China has this very clear and different approach for different forces within Taiwan, right? On the one hand, they have the carrots for the opposition party that is very willing to cooperate and is very pro-Beijing. So China on that trip, when the opposition leader visited China and met with President Xi, China came out with this slew of goodwill measures, right, including resumption of flights, resuming the import of certain goods like selected films from Taiwan, agricultural goods. But then on the other hand, when it's dealing with the DPP, which is the ruling party right now, they have a very different set of measures. And just yesterday, Reuters reported that the aircraft carrier Liaoning was passing through the Strait of Taiwan again in this threat of the island. It is coming as the DPP, the government, just announced that for the first time it is going to hold joint drills to really prepare for any possible blockade of the island by China. So tensions between both sides are brewing. It comes as China also is using its leverage over other countries to try to put pressure on them to stick to the one China principle. It's also pressuring the US, for example, to be cautious about any arms sales to Taiwan. So it's a very multi-pronged approach here. While at the same time, at the people-to-people level, they are also encouraging Taiwanese to come to China to do business and have more youth exchanges and to kind of soften the public opinion on that side as well. So overall, a very well-rounded strategy from China on this front.
All right, Min, thank you. Our China correspondent, Min Lo there. Of course, on the latest one, Taiwan. We're taking when it comes to CATL and maybe some of these battery makers here this morning. The company has shown off this new lithium iron phosphate battery, and it says can recharge an EV, get this, in just 6 minutes, coming closer to the time taken to fill the tank of a gas-powered car. Let's bring in Danny Lee, our Asia Transport reporter, joining us with the details on just how CATL is really leading the technology in some ways. How does this all stack up against the competition?
Yeah, you look at BYD, who last month announced its own version of superfast charging that could fully charge basically in 9 minutes. CATL, even better. So in the time it takes for us to talk, you think of how much a superfast charging EV battery will charge, maybe about 30-40%. So this is another leap of innovation, and for CATL trying to make sure it keeps its market share, focuses on what it does best. And I think for analysts, they see this as a pretty good development, but there's still not a lot of talk about some of the really long-range goals of. I think there's solid-state battery, for example. This is really expensive stuff and tricky to do. So analysts, at least in the meantime, are quite happy that CATL are focused on the here and now and cost-effective stuff that it can consolidate its market share and really continue to lead, whereas BYD has struggled and lost market share, particularly against CATL.
And Danny, how is that also affecting perhaps what we're seeing down the line in EVs and how competition among them is shaping up?
When you see quite a lot of the EV makers really coalescing around CATL because of its size, its heft, and its tech, so all of this will help CATL continue to gain share, and for many of its customers, the likes of Geely and others, being able to use these kind of products and really continue to accelerate, particularly as when you look at someone, the next competitor in BYD, it has continued to struggle in the recent months and in the past year. So therefore, there is going to be a lag and a gulf in the kind of technology that is being offered, and it puts CATL in pretty good stead when it comes to this product pipeline and development that is still yet to come.
Danny, thank you. Bloomberg's Asia Aviation and Transport reporter Danny Lee. And tomorrow we'll hear from the founder and chairman of lithium-ion battery producer Gotion. We'll ask Lee Jun about the new landscape for battery makers amid domestic competition and geopolitical uncertainty. This is Bloomberg. Some corporate news this morning. Bloomberg's learned that a small group of unauthorized users accessed Anthropic's new Mythos AI model, which the company itself warns could enable dangerous cyber attacks. According to a source and documentation viewed by Bloomberg News, users in a private online forum gained access on the same day Anthropic announced a limited test release of the model. Anthropic confirms it's investigating the report. SpaceX says it has an agreement to either acquire AI coding startup Cursor or pay for its work as it moves to catch up with rivals in AI coding. In a post on X, the company says it'll buy Cursor for $60 billion this year or pay $10 billion for a deal. SpaceX is planning an IPO this year after its merger with xAI, which CEO Elon Musk has said is behind on coding tools compared with its peers. Bloomberg's been told that MTR Corp has raised $2.4 billion in its first ever public Hong Kong dollar bond sale. A source says the company priced 5, 10 and 30-year green notes to fund or refinance eligible projects. The public transport and property developer, majority owned by the city government, had previously only issued unlisted notes that were not publicly syndicated. Yvonne?
Yep. All right. We are checking when it comes to movers here this morning. And yeah, surgical robots. Yeah, we're getting pretty granular here on the robotic space here. But Goldman Sachs has a pretty interesting report about them and saying, look, the market could really reaccelerate from here on forward here this year. So these are some of the sort of the top picks that they were looking into here. Obviously, given just the headline risk here today, they're not having a good day. But yeah, we are focusing on the robotic sector very closely in China of late. When it comes to where the tech trade is going here, there has been some, I guess, continued bifurcation among the hardware versus software names. And what you're still seeing in Asia in particular here is that the hardware space is still looking pretty hot. Take a look at some of these optical names. They are continuing to lead some of the flows into the mainland here today. You're seeing that in parts of Japan as well. So some parts of that tech trade are still alive and well, despite what you're seeing in mega cap China tech here today, all seeing pretty massive losses of 2 to 3%. Alibaba, there you go, seeing and really leading that charge. And we're going to go and do a bit of a deep dive into the AI space moving forward here about, AI deferring tech profits here. Maybe it helps with profitability, according to Robert Lee, but not so much when it comes to profits. That's the take from BI. We're going to have much more coming up in the second hour of the China Show. Keep it here. Welcome back to the China Show. Here's a look at the HSI half hour into the session, and we are joining in on a cautious day here on Wednesday. We're lower by about 1%, so session lows here so far. 8 shares are also following a similar measure. Certainly there is still a bit of, uncertainties around there with the Iran situation. So once again, we are kind of reacting to some of the headline risks when it comes to where things stand when it comes to U.S. and Iran talks, which have been put on hold. J.D. Vance really had to redirect his trip to Islamabad, and we are still hearing that the ceasefire has been extended indefinitely here right now. So at least right now it seems like we haven't seen any military escalation, but markets are still thinking, look, there's still a lot of question marks on what comes next. You take a look at how the rest of Asia is faring, and you are still seeing that dispersion across different benchmarks across the region, right? So Japan, Taiwan is actually still doing quite well. We talked about here when it comes to Taiwan over Korea, most people are rotating towards Taipei these days because of that whole AI full stack that you get over just the memory space in Korea. So there you go. Taiwan continuing to look like a pretty bright market here today. We're up about 0.8%. The topics and cost beat are seeing a little bit of red here. But here's how Southeast Asia is faring. There's been some news across the region here, whether it is what happened with MSCI Indonesia yesterday. We see a second day of losses for the JCI. The Philippines also, that rating outlook has been cut by Fitch here, given that some of the growth prospects they say are dimming. So that credit rating to negative from stable. Their concern is a decline in public investment and rising energy costs. We're not seeing a whole lot of movement in the P comp here right now. We're flat, but we're watching the peso very closely here today. But most of Southeast Asia in the red as well, and joining in on this sell-off here today. You take a look when it comes to oil markets, and here's how we stand. Brent, WTI, we're still around that $98 level here, so we're still sub 100. We're still watching Treasury markets here after that Warsh confirmation hearing. Still, it was the inflation hawk. It seems that way, just given what he was talking about, inflation, new frameworks, talking about, no forward guidance, talking a little bit more about, maintaining that central bank independence. So we're watching very closely what this means. U.S. dollar, though, is on offer here today as well, Avril.
Yeah, given what Trump has said, right, about extending the ceasefire with Iran a day before it was set to expire, though he's maintaining this U.S. blockade of the Strait as plans for these fresh rounds of talks with Tehran, they've just fallen apart. For more, let's bring in Bloomberg's Horizons, Middle East and Africa anchor, Jumana Baseshi, live from Dubai for us. Jumana, so you're still seeing the Strait blockaded. Talks have faltered. Yeah, we are seeing an extension of the ceasefire. I mean, it looks increasingly like a protracted conflict. What's the state of play?
Yeah, or protracted ambiguity. And, we spent most of yesterday trying to figure out whether these Islamabad talks were actually going to take place. Certainly, there were lots of signs that they were going to happen. The U.S. had the appetite to send a delegation. Preparations were fully underway in the city. But it seems in the very last hours of the day, the talks fell apart, which prompted President Trump to put up that Truth Social post suggesting that they have now agreed to extend the ceasefire indefinitely. Trump saying in that post that they will do so until Iran submits a new proposal and discussions are concluded one way or the other. He says that came at the request of the Pakistani mediators, but then also blamed the collapse on what he cites a seriously fractured leadership structure in Iran, something that we ourselves had been reporting on, and the fact that some more pragmatic voices in Iran perhaps wanted to continue with the negotiations versus the more hardliner approach taken by the IRGC. Now, the semi-official state news agency Tasnim has said that Iran never officially requested an extension of the ceasefire. But the bigger issue, and this is, vis-a-vis a comment that we got from the Iranian foreign minister overnight, is the ongoing closure of the strait, as you just mentioned. And in that Truth Social post, President Trump referenced that they're going to keep the strait closed. The naval blockade is going to stay in place. The Iranian foreign minister overnight posting that blockading Iranian ports is an act of war. And this was one of the major sticking points yesterday. The Iranian side once again saying that so long as the blockade stays in place, they would be less incentivized to go to another round of discussions. So putting it all together, we're not in a state of peace. We're not in a state of war. We are in a state of ceasefire, but the blockade still exists. And it is this ambiguity, I think, that's going to be hanging over the region for the foreseeable future, unless we get a breakthrough somehow, either diplomatically or there's still that question of a potential return to hostilities. It's not out of the question now.
Yeah, I mean, it was just, earlier statements from Trump saying that the military was raring to go and that, he expected to be bombing Iran if things don't go his way. So in terms of those breakthroughs, potential ones, what do we need to be looking out for next?
Yeah, so I think you need to watch what happens with the blockade specifically. There were reports yesterday, again, and this was, lots of people speculating that perhaps because Trump was so keen to get these negotiations across the line, maybe he would temporarily lift the U.S. blockade that is in place to lure the Iranian side to the table. The alternative view is that the longer they keep the blockade in place, the more the Iranian economy is going to hurt, and then the more incentivized the Iranian side would be to capitulate. So at this point, it is a standoff. We have to wait and see how this all evolves over the next couple of weeks, because ultimately, this situation, this status quo with the straits effectively closed with no vessels going through is a very dangerous outcome for the rest of the world, economically speaking. And we've just been talking about, the fact that this morning oil prices haven't really done that much because there's still so much uncertainty about what happens with that strait. There's going to be a lot of pressure coming through from the international community to forcefully reopen it up. So in order to proceed to the next phase of discussions, you have to somehow deal with the matter of the strait and then get on to the more thorny topics to do the nuclear file, Iran's arsenal, missile arsenal, their proxies around the region, and of course the sanctions lifting that they've been pushing for. So the sequencing here is important, but the main focus, I think, short term is going to be on what happens around the Strait of Hormuz.
Jumana, thank you, Jumana Bersechi there, our Horizons Middle East and Africa anchor joining us live from Dubai. Let's bring in Vivian Thurston now, portfolio manager at William Blair. Vivian, it's great to have you. Today is one of those days where we can reflect a bit. We're hitting the pause button on this whole, Asia rally that we've seen. Global stocks, though, up until now have really shrugged off a lot of the geopolitical headlines when it comes to Iran. The AI story certainly has been that buffer and AI over, what we've been seeing across energy markets, energy shocks. But how long do you think this can continue?
I think as long as the fundamentals of all the companies remain very strong. And I think you're definitely right that tech or AI-driven kind of earnings and corporate fundamentals improvement continue to be the biggest support, I think, for a lot of global companies, and especially the tech supply chain companies in Taiwan and Korea. So if you believe that the fundamentals remain supportive, I think the market will look through those near-term uncertainty and the noises related to the war. I would say the initial shock from the war probably already is over. So now we're entering this kind of back and forth uncertainty period between ceasefire or, open fire again. But I feel market start to get a little bit better feel about this, given the strong fundamentals remains. And as we're heading into the first quarter earnings season, and I think that will remain the focus of the global market as a whole.
I'm going to bring back what we heard from Goldman Sachs' CEO, David Solomon, too, about just, it seems like we're just one tweet away sometimes from the president and really sparking some sort of downturn economically. How do you subscribe to that sort of view? I mean, it seems like I know you're saying the fundamentals are still pretty solid among some of these companies, but it seems like all it takes is maybe one post to really change sentiment.
Yeah, sentiment definitely will be influenced more frequently, I would say, by some of the narratives or the headlines. However, if you look at the final impact on the economy, I think that's more important. So I wouldn't want to dismiss the idea that if the war drags on longer, I do think the global growth, inflation, and interest rate cycle would be at risk. And those, I would say, more macro risks would probably have a bigger impact on the economy and also the global equity markets as a whole over the medium term. So I do think we need to watch the duration of this holding pattern period of the war, given that, as I mentioned, that energy price continue to rise, it will lead to higher inflation and asymmetrically even impact some of the emerging markets even more adversely. So I do think there will be an impact. However, from the bottom-up corporate fundamentals perspective, a lot of those tech-driven companies, they're agnostic to this kind of development to some extent, right? Even though I think inflation eventually will impact the interest rate environment, which will hurt more the tech and growth stocks more. However, given the demand of the tech remains so strong, undersupply is persisting, and that will continue to support the pricing dynamic of those companies. So even though, let's say, inflation will be 2-3% even higher, but those companies' ASP, we're talking about double digits. Even you have double-digit ASP, you still don't get enough supply. So that's why what I meant about the corporate fundamentals from the tech perspective actually probably matter more in the next couple of quarters.
So from the tech perspective, it's also about this rotation that we've been seeing in Asia. I mean, except for today, perhaps, on to AI trades, we've been seeing Korea, Taiwan doing well. But I wonder, do you have a preference for one market over the other because of what's been highlighted about the exposure in Taiwan to a broader swathe of the AI stack?
I would say if you look at the key drivers, both Korea and Taiwan, both economy and the equity markets are primarily driven by AI tech. But I do think Korea has a little bit broader drivers outside of the tech. For example, a few cyclically recovered industries, such as power equipment, shipbuilding, and also defense, actually are also very important for Korean markets. So those, to some extent, also probably are idiosyncratic kind of developments, given that those are industry cycle stories. And on top of that, I think Korea also have this value up initiatives. I think that will further help the corporate fundamentals improvement and return profile improvement. So I think both markets have a pretty favorable backdrop, maybe for different reasons, even though I think the common factors are tech. And I do think Taiwan has definitely more tech, 95% is tech. Korea, I think more other industries in addition to memory, but also have some other corporate fundamentals initiatives like value up and those kind of developments.
How should I look at memory in Korea now, Vivian? They've rallied a lot, massively. Valuations are still pretty cheap and a fraction of what you see across some of the U.S. big tech names. But maybe they're low valuations for a reason, right? Because the cyclicality and the nature of this sector, right? That, some people say you can only see valuations catch up unless you see some sort of structural story that's emerging with the AI supply chain. Do you see that sort of structural change happening, or is this more just a cyclical sort of play?
Yeah. I mean, there has been a debate out there whether now memory is more structural story versus a cyclical story. I do think even it's a cyclical story, I think this phase of the upcycle is longer and stronger than before, given that HBM is really in a big shortage globally. And I believe that the consensus expectation is this shortage will last until at least the end of 2027. So even further into 2028. So because of this backdrop, I think memory actually remains pretty favorable from the industry backdrop perspective. And on top of that, I think the two players in Korea, they are very dominant players in the space. That's why I feel nowadays emerging countries become play a bigger role in the global tech supply chain, because we call it global champions of those mission critical supply chain are all in emerging countries. Having said that, I do think memories tend to be more cyclical than not, especially DRAM and NAND, and those are not HBM or high bandwidth memory. So those tend to be more cyclical, and therefore there's a reason maybe those stocks are traded at the slightly lower multiples than some of the leading Taiwan tech companies.
Vivian, what's your take on China now? It seems like we still see flows going to the currency. It remains strong against most Asia FX. I take a look at the flows into the bond market. Equity markets still remain quite resilient. Does China stand out to you in the face of all this volatility? And how to position?
Yeah, I think China is kind of on its own, if you will. First of all, they have a very difficult two-speed economy and pattern for a long time, meaning that domestic consumption, domestic kind of manufacturing or fixed asset investment, private market remain pretty weak. And so we're on this deflationary path for a long period of time. But on the brighter side, you see the exports continue to do very well, especially the innovation-led kind of exports, whether it's tech or advanced manufacturing or EV or ESS, all those. So I think because of this divergence from the underlying economy perspective, I think in China, you're probably going to see more selective companies doing better. And then you rely on those selective industries and companies to drive the overall equity markets. Therefore, the rally may not be that strong, or they will take a breather and come again. But net, we still feel constructive about China from the bottom-up perspective, because we see the broadening of those tech innovation-driven industries, including even biotech, healthcare. So definitely compared to last year or a couple of years ago, I think China definitely have more interesting investment ideas out there. And I think they are also getting stronger and better as their positioning on the global level continue to improve. So that's how we think about China. Yeah. But on the aggregate basis, I think the China A-share markets and the H-share or Hong Kong markets also have a little bit different dynamics. I think that's primarily driven by liquidity and flow. China A-share market is more kind of determined by the local investors, and they tend to like those maybe ideas a little bit more. But the global investor tend to look at Hong Kong market on the global context.
Right.
And so that's why.
Vivian,
yeah.
Wanted to ask as well, a bit more quickly if you can, your view on India. I mean, we've been talking about the reassessment in the past couple of months, and then that's kind of been exacerbated by the war in Iran because of India's exposure to energy or the vulnerabilities there. Do you see there as having been enough of a de-rating for that market to look attractive in some form?
On a historical basis, Indian multiples have come down quite materially. However, the earnings also decelerated quite tremendously. So this year, I think India total earnings growth is about 8 to 10%. Yet, I think the market overall still traded more than 20, 25 times PE, and some companies still 30, 40 times. So from the relative perspective versus the other emerging markets, I do think India looked less attractive, adjusted by the earnings growth. even though over its own history it has gotten cheaper, but for a reason. India is also the anti-AI trade to a large extent, and domestic economy also kind of in this normalized weak period across consumption, financial services, and some local production and manufacturing fronts. Therefore, India, I think in the near term, could be a little bit difficult to attract more global investors' interest. And on top of that, Iran war will have a more impact on India, given that India is a net oil importer, and 90% of the Strait of Hormuz kind of oil goes to Asia, and India is a big part of that. Yeah. Therefore, you see Indian rupee really depreciated a lot in recent times. So combining all those factors, I do think near term, India could remain a little bit difficult until we see the earnings start to pick up again.
Have we derated enough? Yeah, key question. Vivian, thank you. Vivian Lynn Thurston, their portfolio manager at William Blair. Still ahead, plans to turn a popular Chinese web series into a movie produced entirely using AI. That's what's causing some uproar on social media these days. We'll look into what it says about the future of entertainment in China and beyond. This is Bloomberg. And now to a Bloomberg scoop. We've learned that a small group of unauthorized users has accessed Anthropic's new Mythos AI model, which the company itself warns is so powerful it could enable dangerous cyber attacks. So let's get more on the scoop with our Asia Tech editor, Mark Anderson. And what do we know about what happened? How did this happen?
So Bloomberg is exclusively reporting that Anthropic's third-party contractor gained access through a sort of routine human supply chain and shared that access with a handful of users on a Discord channel. Now, it's important to note these users say that they're not using their access for any nefarious means. You know, they're just sort of AI enthusiasts and they want to explore the capabilities of this new model. And also Anthropic has said that like none of their systems have been affected by this. But it does, of course, raise lots of questions about Anthropic's ability to contain access to this very dangerous model at a time when many people are trying to have a look at it.
And so who do we know so far has gotten that approved access?
So Anthropic says that, Mythos is extremely dangerous. It has the ability to carry out advanced cyber attacks. Yeah. So they've given a select group of tech companies, including Amazon, Apple, and Cisco, early access. They've also given some U.S. government agencies some early access, and U.S. Treasury Scott Bessent earlier this month summoned some of Wall Street's biggest banks for a closed-door meeting that Bloomberg exclusively reported to sort of warn of the very dangerous capabilities of this AI model.
Tell us about what the dangers of Mythos could be. I mean, they talked about cyber attacks and the like. How dangerous can it get?
So Anthropic says that Mythos has the ability to exploit vulnerabilities in every major operating system and every major computer browser. So it does remain to be seen whether or not those claims are actually true. But we have seen recently in Mexico another AI model used to carry out a data breach that was very worrying. Of course, there's a lot of concerns that this will be the tip of the iceberg as AI gets more advanced.
Yeah, certainly does lay out some of the risks as well. Mark, thank you so much. Mark Anderson, our Asia Tech editor, on the latest when it comes to Mythos. We'll continue on and see how things fare out here in the Asia session. Of course, we talk about here when it comes to the Hang Seng. We're still seeing some underperformance here compared to the mainland markets here today. Mainland looking a little bit more steady. This is Bloomberg.
Some global news this morning. The International Maritime Organization says it's working on a plan to evacuate crew from ships stuck in the Persian Gulf since the Iran-US war began. But the organization says it can implement the plan only after clear signs of de-escalation. Speaking to Bloomberg in Singapore, Secretary General Arsenio Dominguez said the IMO needs to make sure there are no threats of any ships being attacked. Russia is set to increase oil flows after restoring crude exports from its main western ports following weeks of disruption caused by Ukrainian drone strikes. Operations have now resumed at all three ports, with most berths back in service. The recovery comes as global energy markets look for alternative supplies to replace shipments from the Persian Gulf. And Taiwan has abruptly cancelled President Lai Ching-te's first overseas trip in more than a year, citing pressure from China. African nations, including Seychelles, Madagascar, and Mauritius, withdrew approval for Lai's aircraft to transit their airspace on its way to Eswatini, citing adherence to the One China policy. Lai later posted on X denouncing what he calls Beijing's coercion and reaffirming Taiwan's right to engage with the world. This is Bloomberg.
$11:29 a.m. in Tokyo. Japanese markets hint at lunch break in just a moment. You are continuing to see that dispersion, not just across Asia, but even within Japan here today. So topics and Nikkei are diverging. You're seeing the Nikkei up about 0.5%. We've been watching, of course, the bank space as well there in particular here. But certainly there's a lot of questions about the AI trade here today. But you're still seeing some tech plays in Japan do quite well. That probably is why we are seeing the Nikkei slightly higher here today, Avril.
Yeah, higher, and this is on a day where we're seeing that outperformance from some markets in Asia stocks. To be specific, Nikkei doing okay, and we're also seeing Taiwan pull ahead today. I think it's getting that double tailwind of sorts from, being Apple suppliers along with the AI trade. So certainly that is one of the markets that is outperforming today, although a bit of the outperformance is being capped. If we can take a look at what we're seeing across the rest of Asia, in the financial related stocks in Taiwan being a bit of a drag perhaps. But this is also what you're seeing. It is mostly cautious across the region, and you're seeing that in energy as well, a bit softer, under pressure, those energy-related stocks, even though we are seeing S&P 500 futures pointing to upside. Now, on the energy front, it's worth keeping in mind some of these tech-related developments that we've been seeing in EV battery makers. CATL, of course, is in the spotlight today for a couple of things. Sinopec has been cutting its stake, but also because of some of the developments in how fast the charging is coming in and really pipping what BYD had to offer us last month, of course, in terms of how fast this charging at 6 minutes is going to look like for CATL. Yvonne?
Yeah, certainly it does maybe serve as a pretty good preview on what we could see at the Beijing Auto Show that's coming up tomorrow. And our very own Stephen Ingles is going to be there on the ground. I should say Friday. Let's talk about what's trending in China as well. Certainly this is quite interesting. A look at what's making headlines in national newspapers and sparking some conversation on social media. And get this, plans to make an AI-generated movie out of a popular web series called Soul Fairy, not sure if you've heard of it, is a subject of hot debate on Weibo. Let's bring in our team, China correspondent Min Lo and our Robert Lee, Bloomberg Intelligence senior analyst here. Min, I'll start with you. Tell us more about this new film. Why is there so much buzz about it?
Yeah, you just saw a snippet, a trailer there.
That was a real one.
That is a real one. It's not the AI movie. It's still in the works and it's not out yet. I couldn't find any trailer. But this is a web series that is very well known in China. It started in 2014. There has been multiple series. There's been movies made as well. So people have an emotional connection to some of the old actors and actresses involved in that series. So ITE, which is China's version of Netflix, has said they're coming up with a new movie, but it's entirely made of AI. And guess what people say? They're really disappointed. They're like, don't destroy my childhood. We want those actors back. And people are saying that it's crazy. I'm going to send my AI friend to watch it. I'm not going to watch it myself. It'll be cool if they can make up those AI audiences, some of them say. And, they're asking, is it going to be cheaper because it's made of AI? People are really quite disappointed. I think because of the emotional connection to the actors, right? They really want that authenticity.
And they never really look like, the AI characters never really look like
To be honest,
celebrity.
I have to tell you, I was quite surprised by the reaction because if there is anywhere in the world that AI films can take off, I think it is in China. Because already, if you look at particularly, because China has this very unique form called the micro dramas, like it's vertical films that you watch on a phone. It's only 1 minute long, and people are not really obsessed with the quality. And there has been so many AI films already out in the industry that is quite successful. So I was quite surprised that they were not open to this movie, but perhaps because this is a cult classic that people are familiar with. But perhaps if it's a new film that is not bringing back the old actors, people might be more open.
I don't know how I feel about it. April, what do you think?
I mean, I'm not sure how I feel about AI-generated content and
yes,
I think sometimes you can't tell the
stripping away our
difference.
childhood. Yeah, but it was also interesting because when you talked about one of the popular content forms that have been coming out of ITE, I thought you were talking about Pursuit of Jade, another very popular Chinese drama of late. But Min Min, talk to us as well about this pivot that ITE has been making into AI films. Does it really feel this strategy is going to pay off?
I mean, it is obviously putting money where its mouth is. It is saying that it's committing capital allocation because it wants to ensure that most of its film is going to be made by AI in 5 years' time. And it's even encouraging AI content creators by promising that they will give them an additional 20% cut of the advertising and subscription fees. They're coming up with an AI toolkit that can make pretty much every aspect of filmmaking, from script writing to the final rendering. And they're creating an IP library of digital AI assets as well that content creators can tap into. And this is coming amid this context where ITE's revenue has been under pressure because of the rise of these other short video tools like Kuaishou, like Douyin, that has been putting pressure on traditional entertainment formats. So they're sort of pushing ahead with this new strategy to maybe run ahead of the curve, to come up with new innovative formats, and perhaps in that process also compress the production timeline and the cost of making films as well.
Yeah, I mean, we haven't even talked about Pursuit of Jade. Everyone and their mother, I feel, has been watching that show.
They
40
have been
episodes.
analyzing the facial features.
I really have to think about whether I need to invest myself in that show. 40 episodes is a lot. Robert Lee, tell me about IGE, though. Are they going to be able to deliver on this promise?
Okay, without bringing too much skepticism to it, look at IGE's share price. This is a stock that has massively underperformed. The ticker is IQ Space US for anybody who wants to check it out. And also, they're a Baidu subsidiary. Their profitability has been under substantial pressure. So obviously, from a management point of view, they need to say something positive. They need to restore confidence to the market. So guess what? AI, I think, will definitely benefit their business. It's a good productivity efficiency tool. But will it be as transformative as the management are making out at the moment? Then probably not. And the prime example, the best example to look to is OpenAI, which within the last couple of weeks has dropped its Sora tool. So Sora was a text-to-video generation tool. The economics of that did not make any sense whatsoever. So anecdotally, they were losing around $5 for every 30 seconds of video that was generated, because the computational costs tied up with generating video, particularly high-definition video, and movies at 24 frames a second, it consumes a lot of compute. Somebody has to pay for that. So the economics behind text-to-video or video generation don't make any sense, which is why OpenAI have dropped it. So IGE is now claimed, or is now projecting, that they're going to go all in on this. Well, all I say is good luck to them.
Robert, I guess for ITE, OpenAI's example is a bit of a cautionary tale. And I wonder, as we talk about AI and jobs going obsolete, what is this going to mean for Chinese actors that have been protesting about the plan? Are they right to be concerned?
Okay, well, clearly I don't work in the movie industry, but here I am sat on TV at the moment. There is a lot more than TV and video than the video itself. There's the script, there's the plot, there's the nuance that an actor can bring, the facial expressions. I don't think there's any evidence that AI is anywhere close to generating that. And also, if we go back to basics, AI as we know it is based on pattern recognition. It's basically regurgitating or giving you a mashup of human-made content, which is why on social media, etc., you're getting so many complaints from consumers about so-called AI slop. So I think that's the danger. We get an averaging down where, basically generic plot lines, very bland content, lacking in the character that you get from, live Bloomberg TV. I think all of you should rest easy. I cannot see within my working career AI replacing any of us.
Oh my goodness.
Famous last words.
Thank goodness.
Have you
and good night.
seen the AI version of me reporting the news? I made a package of that last time. But I'm just going to beg to differ a little bit because I know you mentioned about OpenAI Sora, but you look at the Chinese landscape, it's completely different. The cost sort of picture there when it comes to the electricity and energy usage, you look at Kling app that belongs to Kuaishou. It's actually one of the most monetized, the leading app when it comes to video to text generation. I've looked at ByteDance's tool as well, and it's really impressive. I mean, I can barely tell that it is made by AI. And I've also spoken to people in the entertainment industry, and there are these gaming studios, production studios, they are all switching to AI because they're talking about using, AI to create graphic rendering versus using a human artist. You're talking about 90% sort of cost efficiency. So if I'm a production house, why not? And they're saying they just, they're creating things that they wouldn't have the capability to do without AI. So it's really huge sort of shakeup we're seeing in the industry right now.
Yeah, I'm with Robert on this one on AI slop, man. I think there's just too much of that out there. And I hate figuring out, is this AI, is this not? Every time I look at social media now. But then again, as you say, China certainly is a different market. It was a great discussion, guys. Thank you so much. Our thanks to Min Lo, our China correspondent, and our Robert Lee, Bloomberg Intelligence senior analyst. So no one's replacing me anytime soon, I hope. No AI bot. We're checking markets because certainly we've got to talk about what's going on. HS Tech continues to sell off here today. We're seeing 2% losses there, so I think it's session lows for that gauge. CSI 300 is still looking pretty steady here, but you are seeing continually the winner is Taiwan. The TAIEX is up more than 1%. This is Bloomberg.
We're also seeing that in spite of what's happening in terms of the global economic situation and the tensions and so on, it's the fact that we are seeing now more China-ASEAN cooperation. That has actually been enhanced over the last couple of months. I think case in point really is the fact we just launched our Galaxy-oriented China-ASEAN investment program, a sovereign-led fund. It is led by CIC, INA, and the Sovereign Fund of Central Azerbaijan. We closed it at $520 million US, and this is actually focusing on the China-ASEAN corridor.
Fong there, Group CEO of CGS International, the overseas arm of China Galaxy Securities, speaking to us earlier. And she was saying, despite all the volatility that we're seeing across these markets, when it comes to that channel between China and Southeast Asia, she's still seeing some strong sentiment there when it comes to inflows. Singapore certainly stood out to her. We're also looking at when it comes to markets, though. We are seeing when it comes to Singapore, the Philippines are seeing downside here today. The JCI has in some way stabilized of late here, but the peso certainly is one thing to watch after we heard from Fitch downgrading the credit rating of that economy here due to, of course, the exposure, of course, they have to energy markets and the like, and really dimming the growth prospects for that country now. Avril.
Yeah, we're also watching Indonesia, right? Because the central bank is expected to keep interest rates on hold today to support the currency after the rupiah hit record lows amid the war in Iran. Let's bring in Bloomberg economist for Southeast Asia, Tamara Henderson. Tamara, we've been watching these central bank decisions unfolding. They've mostly chosen to keep things unchanged, maybe say for Singapore. That was a bit of a different story. But, I mean, how long can they keep things on hold for? And I guess for Bank Indonesia today, do they necessarily have a choice because it's about the currency?
Well, I think in the short term, the hold is a natural outcome. For one, we still have three scenarios in play. We have the status quo scenario, we stay where we are. it gets worse. And we also have the scenario it gets better. The parties are still talking. So significant uncertainty. Even when let's say we were to be in a scenario where the status quo just continues, even then, near term, I think there's going to be a bias or an inclination to remain on hold as well because of uncertainty having to do with transmission, how fast, how much, how long. We'd see inflation and growth impacted. We have to keep in mind in the near term we're experiencing cushions, so we're not really seeing yet the full impact of the shock on the economies for various reasons. And of course, our textbooks tell us central banks can look through shocks, supply shocks, if they're not worried about pass-through, second-round effects, because the base effect is just going to take inflation out in year two. Of course, that's theory. In practice, it will be different. You mentioned the currency. So, yes, currency will be a factor on determining whether the central bank can remain on hold, as well as inflation expectations. When we start to see inflation start to get really ugly, and we're going to see inflation expectations moving, they'll be concerned about their inflation anchor, and of course there'll be probably government countermeasures, right, to support households, which will also actually complicate the spillover transmission.
Yeah, and it also, I guess, is a bit of a divergence in the Southeast Asian region in terms of which governments can offer that sort of support, right? As we've seen following on from the pandemic, some haven't necessarily built up their fiscal buffers. But to your point about the shock and there being a bit of a cushion, the issue is also that these economies are facing multiple shocks in a way. Indeed. I mean, we've been talking about tariffs the past year, and now there's energy shock. So net, what should we be expecting?
Well, there's a lot for the central banks to deal with. I mean, in July, we're going to be seeing probably the replacements for reciprocal tariffs come back online, so we'll having to be juggling that. There are domestic for Indonesia. There are domestic factors as well. MSCI is going to make a decision about their equity index. So yes, so there's a lot. That they're going to have to consider. So I think for Bank Indonesia, the currency is going to be the thing we're going to be watching very closely. You know, obviously we've seen the currency depreciate, so it's not just the direction the currency is moving, it's the speed and the ability, the comfort with the pace of the rupiah depreciating. You know, if we're still having risk aversion as an added factor, as an added weight on the rupiah. So how much the rupiah is moving relative to peers, I think, is going to be an important signal for whether we think the central bank might be pivoting to hikes to support it.
You mentioned the MSCI considerations. What are you perhaps seeing among foreign investments into Indonesia? Because we are seeing how in the first quarter, I think there was still quite solid in terms of inflows. But what do you think foreign investors might need to see in order to have a bit more conviction?
Well, I think the critical factor on that decision is whether Indonesia stays within the emerging market benchmark and doesn't get downgraded to frontier. That's going to, if it gets downgraded to frontier, that's going to close off a lot of capital. So, you know, companies are constrained in some ways where they can invest. So that will close a door. That would close a door. You know, there's the other option is status quo stays, or maybe the weighting gets reduced. I think the thing that the government wants to avoid for sure is getting a downgrade.
Okay, Tamara, thank you for running us through what's at stake for the Southeast Asian economies. Good to chat. Thank you. Bloomberg economist of Southeast Asia, Tamara Henderson in Singapore. Yvonne, you're keeping an eye on some of this corporate developments as well.
Yeah, that's right. We're watching SpaceX. It says that it has an agreement to either acquire AI coding startup Cursor or pay for its work as it moves to catch up with rivals in AI coding. In a post on X, the company says it will buy Cursor for $60 billion this year or pay $10 billion for a deal. SpaceX is planning an IPO this year after its merger with xAI, which CEO Elon Musk has said is behind on coding tools compared with its peers. China Wonka has secured enough creditor support for its bond maturity extension plan, easing the risk of an imminent default. A filing shows that bondholders approved a proposal to repay 40% of a 2 billion yuan bond up front and delay the rest by 1 year. Wonka is one of China's last major property developers to so far avoid default. Adobe has announced a $25 billion share buyback over the next 4 years as it grapples with a drop in market value on AI-led disruption. The company's CFO says it's a direct expression of confidence in cash flows and long-term value for investors. Adobe stock has fallen almost 30% this year as investors worry about AI's potential to disrupt software companies' business models. And with much more ahead, this is Bloomberg.
Mistral AI says the French startup has evolved from an open source provider into a full stack AI platform focused on helping large enterprises customize models. Their chief revenue officer told us more about how they're positioning as complementary to major industry players.
We very much found our niche in the context of larger enterprises needing customization of models and portability of models everywhere. It means that we coexist with the players you've mentioned, and we really found our stride in helping organizations really achieve end-to-end business transformation. Use cases where off-the-shelf AI is not sufficient, when you're going to need really to deploy those models everywhere and customize them to your own IP, to your own data. Really, Mistral is finding great leadership in that segment of the market.
How much revenue comes from outside of France and outside of Europe?
Yeah, we've seen a tremendous, I would say, acceleration globally. So we have quite a bit of a customer in Asia today, Ministry of Defense Singapore, the Ministry of Home Affairs in Singapore as well, and more momentum in Asia. In the United States, we're having also quite a bit of momentum with customers like Cisco, Dell, all the way to Snowflake. So the momentum that Mistral is experiencing is very global in nature. And that's because the need of customization and the need of portability is not only a geopolitical topic. It's a topic that's concerning all enterprises that are really trying to achieve return on investment. And for that, customization is a key topic for them wherever they are.
Is Mistral AI fully committed to the US?
We are very committed to the US, very committed to all markets, and most importantly, very committed to the larger enterprise that's really in need to accelerate their transformation.
That was Mistral's AI's Chief Revenue Officer speaking to Bloomberg's Francine Lacqua. We're checking markets here. In particular, movers that we're tracking for you today is the defense side of things here. This is what the regional stocks are doing here. So mostly higher this morning with the likes of LIG Defense and Aerospace. That's up about 10% in Korea. So the Pentagon is also seeking the $75 billion for drones in this record budget ask. So that's certainly one thing that's driving the defense sector here today. Property stocks are quite interesting as well. JP Morgan just came out with a note talking about the beaten down property sector, and they say likely at a turning point that will help the nation's stock outperform their emerging market peers. We're not quite seeing that here today, just given the downdrift that we're seeing across markets, but certainly that is one sort of debate that we're seeing here, whether we have seen a bottoming in this property market. BE says, that's up for debate, and no right now, because this rebound largely has been driven by top tier cities here right now. But Wonka certainly winning the creditor support to delay that bond payment has been some good news on that front here today. That's it for us here on the China Show. We've got Insight coming up next. Stay with us.